Hey guys, what's going on? It's Aaron from Market Alert, giving you your daily market alerts for stocks. With the earnings report coming out next week, it could be time to buy more stocks. And one of these stocks could be Apple. Let's find out why. But before we get into it, if you like what we do here, smash that like button. It really helps us with the YouTube algorithm and to get these videos out for you guys. And be sure to subscribe for more market related updates. And don't forget to comment below your thoughts on the potential earnings of Apple and if it's going to be a good buy before next week. Alright, the technology giant Apple is slated to report its results for its fiscal second quarter next week on April 30th. When the update goes live, investors will be paying close attention to how the coronavirus pandemic negatively impacted the company's results. In addition, investors will likely look at management guidance for its current quarter to assess the impact on its business since the close of the fiscal quarter 2 in March. But beyond Apple's quarterly results and management guidance, there's another area investors in the tech stock may want to check on, and that's Apple's dividend. And we all know Apple's dividend is a key factor when it comes to investing in a stock long term. The company typically announces a dividend increase alongside its fiscal second quarter results, and this year's April update will likely be no exception. But the million-dollar question is, will Apple boost its dividend during this pandemic? Since initiating its dividends in 2012, the tech giant has increased its quarterly dividend every year since. With a dividend history like this, most investors are probably assuming that the tech giant will announce yet another dividend increase alongside its fiscal second quarter results on April 30th. But these are unusual times. In February, Apple pulled its guidance for fiscal quarter 2 as the company endured production constraints and weakening demand for its products in China amid factory shutdowns and store closures during the coronavirus pandemic. Of course, as the quarter progressed, demand likely suffered in markets beyond China since COVID-19 quickly became a global issue. Despite these near-term challenges for Apple, there's still a good chance that the tech company will boost its dividend once again. This is because Apple's committed to working towards achieving a net cash neutral position, meaning its total cash is equal to its total debt. At the end of Apple's most recently reported quarter, the tech company still had $99 billion more cash in its balance sheet than it had debt. Even more, CFO Luca Maestri reiterated during the earnings call that the company continues to target a net cash neutral position. If Apple were to pause its dividend increases, it would slow the company's progress towards its goal of becoming net cash neutral, and the company is still arguably far away from this target. We all know Apple can weather away anything that's thrown its way. Additionally, while Apple's ability to generate excess cash will likely take a hit temporarily if sales falter during this corona pandemic, the company will likely still continue generating substantial level of positive free cash flow. Its trailing 12-month free cash flow was $64 billion, and that was on a $268 billion of sale. It would take a massive downturn in sales for cash flow to dip to levels that Apple wasn't able to pay out its dividend. For its $64 billion in trailing 12-month free cash flow, about $14 billion was just paid out in dividends. With a hefty cash flow like this, it's highly likely that Apple will maintain its streak of annual dividend increases. So investors who are curious about what Apple will do with its dividend can tune into the company's fiscal second quarter results after markets close on Thursday. Well, there you go, guys. With that being said, I believe Apple might be a good buy right now if you want to go long term. So if you want to jump in and buy some stocks like I have, go right ahead. And also, thanks a lot for tuning into Market Alert. If you like what we do here, be sure to hit that subscribe button. It really helps us to bring content out to you. And be sure to hit that like button. And I'll catch you guys on the next one. Cheers.